the integration of the East African community gives Equity a very unique opportunity where it moves from a market of 40 million people to a market of approximately 130 million people. So you're talking about for 3 times the size of the market, instant growth. And Equity sees this as a huge opportunity to reduce its unit cost, particularly on items like ICT, because essentially, once it becomes a single market, then it means that the back office can be a shared service. You no longer need, and this is something that essentially will not only reduce the cost of doing business, the cost-income ratio, but a benefit that can be passed on to the market. The second one, of course, is the research competencies that the bank has been building. It's now leapfrogging on that and planning to leapfrog on that to establish similar products, only customizing them because the circumstances, the environment, the socioeconomic structure almost remains the same within the East African countries. But as you said, when one wants to take advantage of this financing cost, a couple of things comes into mind. The first one is the capital structure, and particularly with Basel III in sight. This is a bigger market, and for you to be able to finance it, you require bigger capital base. And it's not just capital base. The structure of financing needs to be looked in because different countries have different needs. The second one is skills and competencies. You go or you move from Kenya and find Tanzania, mineral extraction is a huge opportunity. You go to Sudan, you strategically positioning to be a player in the oil industry. So the skill sets that are required then vary. So institutions and finance companies that want to take advantage of these needs to diversify their focus such that they're able to meet the various needs of the market. Of course, they need to appreciate the divergence in culture. The fact that it's a bigger market is not really something that you could do cut and paste. These different people, different socialization and orientation. So there is need for greater appreciation of culture. The issue of trade finance comes out on fold that institutions need to strengthen their capability in trade finance simply because the trade flows really are very significant between that. The greatest thing of that integration is that we are having more cross-border trade because the barriers have been removed. So banks need to be cut-raised to finance that trade and consequently require greater competencies. And of course, the last one is the structures of the institutions. Single or market operation requires a very thin organizational structure. When you become a regional player, of course, then the institution needs to have a regional structure so that you're able to manage, closely monitor the operations.
Doing business in Africa, you can't afford to be without Africa Investor.